Hello, welcome everyone. Thanks for tuning in for this live session of my Crypto Capsule Commentary that's really going to focus on the executive order that has just been issued by the White House on digital assets. This is obviously a live session. It's live on Twitter, on LinkedIn, and on YouTube, and it will be then available for those of you who prefer listening to this on the podcast, as well as across the various video channels that I have across LinkedIn and YouTube as well. My goal over the next couple of minutes is very, very clear. I want to share with you what you need to know about this executive order. What is the goal? What is its impact on the global crypto ecosystem and on the broader financial space? Why this is being issued now? And who are going to be the winners and the losers? Hope you're ready. Let's rock and roll. First of all, what's important to understand is that today the White House on March 9, 2022, really released this executive order on digital assets, which really sets the tone for the direction that the US wants to take on crypto. This is not a surprise, by the way. Many in the crypto community have been discussing this. Even the news was leaked last night that this was going to come today. But I think the content, the exact content of what it was going to include was still unknown. But this is a big milestone because for the first time, there is a national policy that is laid out in the US, what they call a whole of government approach, that all the various verticals of the government arms are involved in this, and also with very clear timelines and deadlines that are set out in the executive order. So first of all, what is the goal? Why is this taking place today? When you read the executive order, it's very clear that there's a really twofold goal that is really laid out. First of all, is to really to ensure that the US maintains its competitive edge in this fast-growing world of crypto by supporting innovation, while at the same time trying to mitigate some of the risk for consumers, businesses, the broader financial ecosystem, and also, very interestingly, the climate. And actually, the climate and the ESG elements are actually mentioned many times across the order. Second thing is that it is very clearly emphasized that the United States must play a leading role when it comes to the international engagement in global governance on digital assets, consistent, and I quote, US democratic values and US global competitiveness. And this is very important, and we'll talk about in a second why this is taking place, but really these two goals are very, very clearly laid out. Now, how do they want to achieve this goal? I think it's when you analyze the order, there's really, I would say, three big defensive moves and three big offensive moves, like in good old basketball or sports. Let's first kick off with the defensive moves because I think those are a bit easier. The first defensive move that is laid out is to ensure consumer and investor protection. Not a surprise there. They're basically directing Treasury and other agencies to assess and develop policy recommendations on the implications of the growth of digital assets and encouraging regulators to ensure there's sufficient oversight and safeguard against systemic financial risk. Again, not a surprise there. Second defensive move they're doing is to ensure financial stability and mitigate systemic risk by basically encouraging the Financial Stability Oversight Council to identify and mitigate systemic financial risks that are posed by crypto assets and to develop appropriate policy recommendations to address any gaps. Again, this is standard language that we see in a lot of policy announcements that are made. And number three, the third defensive move is really to mitigate illicit finance and national security risk by basically directing, and I quote, they use this term, unprecedented focus of coordinated action across all the relevant US government agencies to mitigate these risks, and encouraging these agencies to work with global allies and partners to ensure international frameworks, capabilities, and partnerships are aligned and responsive to risk. So again, obviously, this is in response to a lot of the conversation against sanctions and potential use of cryptocurrencies and money laundering and other illicit activities. So these three big defensive moves, I would say it's not a surprise. This is something you would expect in any kind of policy development. Now, the most interesting part is the three offensive moves. And these are important to spend some time on analyzing what they mean. First of all, the first order that includes to promote US leadership in technology and economic competitiveness to reinforce US leadership in global financial systems. And the way they're doing this is really by directing the Department of Commerce to work across the US government, establishing a framework to drive US competitiveness and leadership, and really to leverage these digital asset technologies. And really what they want to do is to use this as a framework to serve as a foundation for agencies to integrate this as a priority in their policy, their research, the development, and the operational approaches to digital assets. So really, I think what's important here to understand is that really they're really reinforcing the case that they want the US to be leader in digital assets, not only local perspective, national perspective, but global perspective as well. Second offensive move that is very interesting is that they put the emphasis on promoting financial inclusion and responsible innovation. The way this is being done is by directing the Secretary of Treasury to produce a report on the future of money and the future of payment system, and to the extent that these technological innovations will have an influence on the future of these technologies, and really to try to have a responsible approach to development, design, implementation of these digital assets, where privacy, security, combating illicit exploitation, and reducing negative climate impact are put as a priority. So very interesting what's happening there. Again, trying to promote financial inclusion with the responsible angle. And the third offensive move, probably the most important of all this, is that President Biden is encouraging now to have the exploration of a US CBDC, central bank digital currency, by placing urgency, this is the word that he uses, on R&D of a potential USD CBDC, should the issuance be deemed in the national interest, and encouraging also the Federal Reserve to continue its research, development, and assess efforts of a US CBDC as well, as part of a broader development of a U.S. government action plan on this topic. And by the way, what's really interesting here as well is the actual order that they release. They also ask that there is actually research being done on the impact that privately issued stablecoins, and there's over 180 billion of that right now, could have on a potential U.S. CBDC as well. And another thing they also emphasize is to have U.S. participation in multi-country experimentation, really to make sure that U.S. is part of some of these global discussions going on. So this is actually quite important because it really, for the first time, sets the tone and the kind of the roadmap of a country, of a policy for the US on crypto. Let's try to analyze what this means. First of all, why now? Why is this order being issued now, not last year, not 6 months ago, or not in a couple of months from now? First of all, I think we all have to acknowledge, and the US knows this as well, that China right now has a lead of many years when it comes to central bank digital currency, especially. As we all know, and I've discussed this for many of you who follow my newsletter, many of you who watch my videos, China has been exploring CBDCs since 2014. They set up an institute on CBDCs in 2016. They have been experimenting since 2017. According to the latest official data, there's over 140 million Chinese residents that have a digital currency wallet, and there's billions of dollars of transactions that have already taken place. And the US knows this very well, and they know that unless the US can have a very good coordinated action plan to deal with this, it may be too late. And this is actually one of the reasons why in the executive order, you see very clear timelines that are put in place. Normally, they're about 6 months, but very clear timelines are put in place for action on this topic. So the China lead is definitely a reason you're seeing this as a catalyst right now. Second, and this may sound a bit stupid, but it's really COVID. As we know, Asia overall, especially China, has taken a way more conservative approach to COVID. There's pretty much a zero COVID policy across China, for example. And this has been obviously slowed down the lead that China was having on crypto. For example, today, even places like Hong Kong, most executives of the large crypto companies have left Hong Kong for places like Singapore, Dubai, or the US, or Switzerland, or other places like that. Following the Bitcoin mining ban last summer in China, pretty much all the talent and, of course, the machines and a lot of the companies involved in crypto mining have moved out, with the majority going to the United States right now. And right now, frankly, while it's pretty much impossible for foreigners to enter China, or it's very difficult to enter China and parts of Asia, the US has been fully open right now. Pretty much there's no more mask mandates. And this is actually pretty good advantage for the US, because unlike when Asia is closed down, now the US can use this as an advantage to try to really push forward the development of digital assets. And this is something that other jurisdictions have also done very well. Dubai is a very good example that, by the way, just issued crypto regulations today as well, and that has been very beneficial to that as well. Number three reason we are seeing this right now, may not be surprised, is the geopolitical context. The big elephant here in the room is obviously the attacks that took place on Ukraine a couple of weeks ago. In recent weeks, really to the days leading to the attacks, Russia has been really experimenting with its own central bank digital currency, and the Russian government has been passing crypto regulations as well. Also, let's not forget that following some of the sanctions that were enacted as well, Russia has been moving more closely to China, for example, for its credit card system. And while today, the Chinese central bank has made it very clear that it has no intention of using its digital currency, the ECNY that it's called, outside of China. They made it very clear in their report last summer that there is nothing that stops it from being used internationally from a technological perspective or design perspective. And of course, the US knows this, and this has for sure has been acted as a catalyst for this kind of order that you see today. Let's not forget that in this order that President Biden issued today, they refer to US democratic values. And I quote, that's a term that they use when referring to the approach they want to take to digital currencies and the evolution of digital currencies. Also, I think we should not forget there's also an element of, there's been a lot of push in recent days from US government officials on whether Russian sanctioned individuals and entities can evade sanctions by leveraging crypto. As those of you read my newsletter and watch some of my videos, that is in theory possible. In practice, it's very, very difficult for reasons that I've discussed previously. Maybe I would say another fourth catalyst today that is important to understand is the reality of crypto in the United States today. Today, whether you like it or not, the US is probably one of the leading jurisdictions on crypto, probably one of the easiest and best places to launch a crypto and run a crypto firm. Yes, there's a lot of conflicting regulations. The policy is often not clear, but there's still a lot of talent, a lot of capital, and to a certain extent, favorable policy frameworks that are available. That's the reason, by the way, many crypto companies, from crypto exchanges to even mining firms, are based here. Many of them are actually listed on US stock markets, and there's literally billions of dollars that are literally waiting on the sidelines to be deployed in crypto companies, a big chunk of it in the US. So really, and let's not forget, the US now has become the biggest, largest country when it comes to Bitcoin mining, for example. And actually the US government and policymakers know very well that in order to take the community that exists right now, a clear and a coordinated policy is very, very important if the US wants to keep this lead from now on. So very, very important development again, and actually this has a lot of repercussions. So who are the winners and losers? Right? Who's going to win from this? Who's going to benefit from this? First of all, of course, this is very positive for the US crypto ecosystem, and I would say the broader US financial services sector. This is the kind of a clear policy, as something that the US crypto community has been lobbying for many, many years. So very positive from that perspective. I would argue this is also very positive for the global crypto ecosystem. You know, many people, I'm sure, like individuals like myself who have been in crypto for many years, and many of you are listening today, we've all heard individuals who thought crypto was a fad, it was a bubble, it's like the tulip mania, and it's going to go away, it's just a fad. I think for hopefully now, for once and for all, it's going to put to rest a lot of misconceptions people had that this was just a fad and it was going to go away. This will drive even more interest, a lot more talent and capital to the crypto space, not only in the US, but also globally as well. Another winner of this actually may be other countries. In the Western world, for example, many countries were trying to take a positive approach to crypto, but there was a big fear. And that big fear was, what is going to be the US's reaction? For example, for many countries, one of the biggest risks they face is losing US correspondent banking relationships. So if previously you're a jurisdiction, large economy, but just still where the relationship with the US mattered, you're always worried about the approach you're going to take to crypto assets and how the US policymakers were going to react. The good news with this now is actually it's very clear that the US is embracing crypto. So I expect to see even more developments in policymaking and regulations from other jurisdictions as well on crypto. Some of the big offshore jurisdictions that have been making a lot of progress in the space, the Bahamas is a very good example that has very good regulations for crypto. Cayman Islands has already very good regulations for crypto funds, and places like Dubai and the UAE that have basically issued a lot of positive welcoming messages towards crypto companies. Actually, the UAE just approved today a whole comprehensive sets of rules for crypto. These hubs will benefit because they will take out some of this uncertainty that existed before. And I think this is something that we should expect to see. Now, to finish it off, who are the losers? It's very difficult to say, I think, who's going to really lose from this order. I would say there's no really clear losers. You may argue, is China really losing from this? Let's not forget that although China is very advanced when it comes to CBDCs, central bank digital currencies, it has completely banned Bitcoin and cryptocurrencies. I think now there's no doubt that the US may become the global leader when it comes to cryptocurrencies. Let's not forget, at the time we're filming this, there's over a $2 trillion market cap in cryptocurrencies, crypto assets, and this is growing every year. So I think pretty much now all the big crypto companies that were based in China have already left for either places like Singapore, Dubai, North America. and these companies are not coming back. So I think while China will continue to have its lead on CBDCs, I think this really sets the path for the U.S. to be the kind of a big leader on cryptocurrencies. And on this regard, we may argue whether China is becoming a loser on this or no. The other potential, losers on this, again, it's arguable, is some of the smaller jurisdictions that had taken a lead on crypto. Places like Seychelles, Gibraltar, Malta, and many others who had come up with very good crypto regulations, by the way, and positioned themselves as crypto hubs. What's going to be very important for these jurisdictions right now is to clearly show what is their edge and what is the advantages they're going to continue to offer to these crypto companies, whether it's better tax advantages, to other market access advantages, for example, to enter the EU, for example. But I think they're going to need to actually refine their positioning and their strategy moving forward to try to convince companies to come to their jurisdiction and not go to the US, for example, where regulations could be clearer and a bit more welcoming on that perspective. So obviously, this is a big development that happened today. Obviously, there'll be a lot of chatter about this, a lot of news, a lot of discussions about this topic over the weeks and months to come. Again, never a dull day in crypto, but I think this is something that is important to understand. And hopefully this was a useful analysis to all of you of, again, what the development was about, who are the winners and losers, what is the impact, and why it's happening today. Thank you very much, everybody, for joining me today on this live session. And I look forward to seeing you all soon for another episode of Crypto Capsule Commentary. See you guys soon.